What's going on, everybody? It's Blake here at Trade Tracer. In this week's video, we are going to recap the market, explain how I am approaching the market, and go over some key levels. So without further ado, let's get started. As always, none of this is financial advice. Always trade and invest at your own risk. All right, so what do we have going on here? The S&P closed in what I would classify as no trend, and in no trend, we don't have an edge. So what that means is that we're kind of sandwiched between the declining 10-day and rising 50-day moving average. As you can see, we're hanging out in this cloud, but on Friday, we did get a powerful reversal. So keep an eye out for later this week to make some new highs above Friday's close. That would get me slightly bullish in the short to intermediate term. The NASDAQ, however, is still below the 10-day moving average and below the 50. So currently the NASDAQ is still in a downtrend. A couple levels that I'm keeping an eye on is this 300 level, and below that we have this range in here that if we do decide to roll over, I would expect some sort of bid to be happening in here right around this 292 to 289 level on the NASDAQ QQQ. Now, what's leading? The Dow. The Dow is leading right now. So a lot of our plays for the playbook this week are going to be focused on stocks that are leading in the Dow because it's showing relative strength. I know we like to trade relative strength, and that's why the focus is on the Dow. Obviously, NASDAQ is lagging, so we're not going to be focused on the NASDAQ for the time being. It's just how it is. You have to adapt to what the market is giving you. And right now it's giving us the Dow is leading. So you can see the Dow actually did close above the 10-day moving average, above the VWAP high, from the coronavirus vaccination news right here, and still is hanging out as support. So anything above this 316.05, we actually do have rules to trade. Swing long, I would like to see a MACD bullish crossover. A little bit of an aggressive early entry on the Dow, but it is showing some relative strength, so keep an open mind. One thing that we did mention last week was gold. Gold below this 166 level, I said probably comes back to this VWAP. We're pretty much there right now. If you took this swing short, definitely want to probably be thinking about scaling some profits there. Bitcoin is actually breaking above the 10 MA with MACD currently, so momentum is getting back in favor of the bulls again. I think for a higher odds trade, I think you could take Bitcoin for a swing long above, let's call it 52,670. So keep a close eye on that level. Right now, the odds are favoring moving higher, maybe coming back to test this 57 level. So keep a close eye on Bitcoin. I do think this is a good area if you want to be adding, and you have some levels to trade it against, right? Anything below this 47 level, we've talked about that 47,000, and then below that you've got the 42,000 level. So those would be the stops if you're getting in this area. So keep a close eye on Bitcoin. Ethereum as well, also showing some relative strength back above the 10 and the 50, and this MACD is curling. So Ethereum, I think anything above the 1740 level, I think you could probably take a stab at another add there on Ethereum. Now bonds, we need to keep a close eye on bonds. So TLT, we talked about this 139 level high. I said this probably needs to hold if we want to see a bounce in equities. Now I don't want to fall in love with this thesis because markets can do what they want, but the way that they've been acting lately, we need to keep a close eye on this 139 level. So we'd like to see bonds hold that level for the time being. All right. So just to wrap it up once again, the S&P is in no trend. All right. We don't have an edge in a no trend. Wait for price back above that 10 MA and that MACD cross for the real momentum to happen. The Dow is leading, so that's where we're going to be focusing on is the stocks leading in the Dow. Have a great weekend, guys. See you on the open.